Federal Reserve Chair Jerome Powell is standing his ground. In as few words as possible, a defiant Powell made clear he's not budging from his chair when President-elect Donald Trump is back in office.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Powell's one-word response came during a press conference 2 days after Election Day. Another reporter pressed for more, and this time, Powell gave 5 words.
Do you believe that the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
In 6 total words, he shut it down. Jerome Powell was first appointed to Fed chair by Trump his first term as president. But the two have had a very public feud since 2018, when Trump started pushing back on the Fed's interest rate policy.
I put a very good man in the Fed. I don't necessarily agree with it because he's raising interest rates.
I think the Fed is out of control. I think what they're doing is wrong. And I think they should drop rates and they should get rid of quantitative tightening. You would see a rocket ship.
That history between Powell and Trump is alive and well today. Earlier this year, a Wall Street Journal report said Trump allies were looking for ways to blunt the Fed's independence in a Trump victory, and even empower Trump to oust Fed Chair Powell before his term expires in 2026. Trump's advisors did not deny the report. Then later this summer, Trump himself said presidents should have a say in interest rate policy.
I feel the president should have at least say in there. Yeah, I feel that strongly. I think that in my case, I made a lot of money. I was very successful, and I think I have a better instinct than, in many cases, people that would be on the Federal Reserve or the chairman.
If President Trump would like to exert more influence on the Fed, he can absolutely do it this time around simply because the political landscape has changed.
The Fed guy's Joseph Wang told us he does believe Trump will let Powell serve out his term and doesn't believe he has the legal authority to oust him, but says there are ways he can undermine him or increase his influence on policy.
One of the potential Trump Treasury secretaries has floated an idea where maybe Trump could just nominate and confirm the next Fed chair after Jay Powell and just have this Fed chair go around and give all sorts of speeches and influence the markets in that way. That's very creative. I don't know if that will happen. Or you could just, pass new laws, nominate new governors, pack the Fed, or you could have legislation that maybe defines the Fed's mandates in ways that are pleasing to the executive. Or if you look back to history, in the beginning, when the Fed first started in the early 20th century, the Treasury Secretary actually sat on the FOMC. They're participating in the discussions. So there's a whole bunch of ways this can go.
Trump's interest in influencing Fed policy concerns Democrats and Republicans alike. When the Wall Street Journal report came out, Senator Thom Tillis said, "I have to think about the Fed for the next 50 years, not the next 4, and independence is important."
The reason that we have an independent central bank is because the political branches often have a temptation to do things that are good for them today, for their current election cycle, that have bad consequences later on. And you see this in Latin America all the time. Government comes to power, spends a whole bunch of money to get elected, and then the inflationary problems, someone else's problem. So we don't want that to happen here.
The Federal Reserve and its chair serve under a dual mandate: price stability and maximum employment. The main tool it has to influence monetary policy is the federal funds target rate, which is the rate banks charge each other for overnight lending. Those rate decisions ripple throughout the economy. As inflation surged post-pandemic, the Fed eventually hiked rates to levels not seen in decades to try to slow the money supply. As inflation has gotten closer to the Fed's 2% target and cracks in the labor market are starting to appear, the Fed began a rate-cutting cycle in September to ease conditions. 2 days following the election, the Fed again cut its rate by 25 basis points. The Open Market Committee's next rate decision will be December 18th.